Hello traders, welcome to Sunday's Market Outlook. Hope you had a good weekend. It is 12th of November and we still have the dollar in a range. However, this week might change, and also if you've had a bit of a tricky time trading some of the cross pairs that we looked at last week, this week may give you a little bit more clarity and may show you some more interesting price action to finally capture the move that you may have been waiting for. We'll look at that a bit later on in this video as we go through the charts. For now, as always, let's have a look at what we've got for this week on the shortlist. We've got a couple of yen pairs, pound yen long, New Zealand yen long bias, euro pound long, euro Aussie long as well. So 2 yen pairs to short, 2 euro pairs on a buy bias. Then we've got New Zealand CAD also looking to buy, pound Swiss looking to buy, Aussie New Zealand in both directions, and we'll explain that in a bit. And then we've got US oil, which is crude oil, as a sell idea. And I'll show you why. But of course, we're going to start with the economic calendar as always, and let's see what are the biggest potential drivers for the week. Nothing much on Monday as usual, bank holiday on the CAD from Canada there. Tuesday we get into it, we have Swiss news, we have pound news, and we have a big one. CPI is a big one on the dollar. We have Swiss pair on the pound Swiss here. We have pound pairs, of course, multiple ones for this week, and the dollar we do not have. However, a little bit linked with oil, a little bit linked with the yen, the dollar is sometimes, so we'll see that will allow dollar to unfold. Not too concerned about it at the moment. We'll watch the dollar chart to see if anything else unfolds. However, nothing for this week. And then we get into Wednesday, we've got CPI numbers on the pound, again another pound news. We've got more dollar news, very dollar heavy news this week, mostly. Aussie news as well. We've got Euro Aussie, of course, on our list. And what else have we got? Thursday, again, Aussie. So one to watch. And then more dollar news, a little bit of pound, and also ending the week with a speech from the ECB. That'll be one to watch. And unusually, another Swiss news. However, that will be on the weekend. Let's see, as we approach the week we go through the week, we'll develop as the market goes along, and then we will adapt. Definitely interesting to see that we have got economic news and data releases this week that match with the currencies that we are trading on, multiple ones. Now, let's move on to the shortlist. Look at the technicals and what we've got lined up. The dollar, as I said, let's just quickly recap. We want to see real bullish price action come in. Last week we did have a close over halfway through the previous week, which is hinting at bullishness. However, don't want to be assuming that, because it may just roll over and move further to the downside. Now, if we do go below here, the low of last week, that will then be a validation and a potential sell. Yeah, don't want to be going back below this low. So again, unclear dollar. Let's move on to the cross pairs. I'll start with the pound yen. Why we're looking at pound yen? Well, continuing on last week, bullishness after this big bullish candle that broke and engulfed these previous highs, previous candles. We were looking to continue on that into the next levels, as you can see on the left here. What next from there? Well, we did not, let's just remove that. You can see we did not reach the levels to the left, which is consolidated. Let's have a look on the lower time frame. Again, looking at this level, however, nothing really happened there. How do I approach it now? Well, now we have to step back, get rid of all this. I'm going to look at this whole thing as a range, seeing as nothing's really happened. We went up, down between these levels, and we are still within that. And what do we look for when we have a range? Well, we look for a break out of that range in one direction or another, and then see whether we've got a move that we can make use of. Now, if we go to the downside, that'll be great because we have a bullish bias, and if we have a bullish bias, we want to see a better price, a cheaper price. So I move to the downside, and then continuing higher would be ideal in this scenario. Where we're going to look to, well, you can see a level over here. We will then have this obvious low as the invalidation point. That was the last low we were moved away from sharply. The market shifted, and therefore we will now have the parameters for a scenario, for an idea, and then from here to the next level, we've got about 200 pips or more, and that will be the scenario for the week. Remembering, of course, that we have pound news multiple times throughout the week. Let's see how this range develops. The longer the range, the bigger the range, the more interesting it is, because the more likely we are to have a big move happen, more volatility. As orders are being collected, the market is ranging, there is hesitancy, and it gives time for people to think and place their orders. And therefore, once those orders are triggered, the market begins to shift a little bit faster than usual. Okay, next one, we're going to look at New Zealand yen, which is also one we looked at last week. And once again, you can see the bullishness came in. We did not hit the targets, these two targets initially, and instead the market ran lower and went bearish. We also have the similar movement here, similar price action, as you can see, which is this range. So a similar type of thing, a similar range, and looking to do the same thing now. This invalidation now becomes obsolete, and we will look to the last low. We'll still look at this area here, and then what we'd expect is once again a move lower, coming out of that range, and then heading in the continuation idea to buy. What would the alternative be? Well, the alternative would be a break of this high, and then would look to trade higher. However, the issue with that is that we are very close to these levels, and therefore the risk reward will be very small unless you've got a very, very tight entry. And what we look to is this idea. Here we are. We can see these bullish unclear candles, sorry, bearish unclear candles on the daily, and another push lower and a swing to then head higher would be really preferable. If we get the push lower, the first break would be this break of structure, and then the second one will be up here. Let's see how the market develops. Yen is typically I would say, just by experience, a bit of a harder one to trade. It does do some unpredictable things, and it requires more patience to achieve that clarity and more price action, more candles to develop, and then to see where we go from there. No harm in waiting, because you have more clarity as time goes by, and no need to rush. It's almost like a risk management strategy. The more you wait, the more clarity you have about what's really going on. Euro pound is an old favorite that we looked at for a few weeks. We neglected it last week because of this bearishness, and we wanted to see whether we have the continuation buy, which is indeed what we have had last week, and just as expected. You could say that we missed out on this move. However, just we wanted to see that confirmation or a swing reversal, which we had, went through these lows, waiting to see what would happen. And then as we went through these lows, we created a swing, went higher, broke these structural highs, as you can see, and then went higher. So now we know we are back into the bullish trend. This will be a significant low as a reference point, and now we have higher prices. What next to from here, well, we're still sticking with the plan that we had a couple of weeks ago, which is these highs, and these highs running higher, higher, higher. And this is a very bullish scenario on euro pound. And as you can see, we continue to break structural highs. How do we look at this? Well, how we look at it next is we want to see a retracement, a better price, and then continue into these original levels we wanted to see. Now, what I can see at this moment in time is a small level right in the middle here. It would be great if we get a drop lower and then continue higher. So that is one option, one scenario. The invalidation would be this low here. So the last obvious low where the market shifted away from, really moved away, came down, made a retracement, and then moved higher, and now we've broken these highs. So this minor level would be interesting. However, if we don't get that and we break through the level here, the next idea, you may have guessed, is a breakthrough, probably reach these highs, and then once we come back, if we come back, a retracement to a better price would be a possible scenario, high probability idea, seen as we are heavily bullish and we have now formed this low and held this low. Okay, that's the idea on euro pound. Very much bullish, never considered the sell scenario because we were just waiting for it to resume in its overall high time frame agenda. Let's call it that. Okay, this week we're adding Euro Aussie. What do we see on Euro Aussie? If we have a look at the month quickly, what we can see is very, very bullish months. We are continuously breaking these structural highs, creating higher lows, moving higher, moving higher. Now, what do we see on last month? Just remove the markings. We have had this bullish candle, some hesitation, another hesitation, continue in this range, and then even though this candle is not closed, we have now, looks like, continuing on that bullishness. Let's have a quick look on the weekly. And what is the weekly saying? Well, after this retracement, this candle engulfed the previous one, went bullish, closed above the previous week. And that indicates a sign that since we have now broken this structure, now continue to go higher. So we had this first clue, which we looked at a few weeks ago, to go higher, which we did have. And now we have the second clue, which is the high of the previous week, which got taken out completely. And the whole week completely reversed against the previous one and went against this bearish week. So you can imagine when you looked at a bearish like this, you would have thought, okay, maybe it's gone lower. However, remembering the higher time frame, which is the king, the daddy, that is what we pay attention to. This candle completely decimated the previous week, and then the clarity is now in. So this is what I mean about patience. Sometimes it's worth to wait and see that. Nothing to say that, okay, it's not going to reach into the lows again. Anything is possible. However, the probabilities are to the upside. What's the upside? Well, we've got the last obvious high here. There's a swing point. And the obvious high up here. These will be the targets. The invalidation point would now be, let me just take, this would be the low of the week. So that's that. Let's go into the daily, just have a clearer picture. And what we can see on the daily is that we have had another swing low over here. But seen as the obvious place where the market moved away from is this swing, this low that was created in the beginning of the week. We're going to take this as the reference point, and then what we'd like to see is a lower price. Again, moving down a time frame, just taking it one step at a time, bit by bit. Here we broke a high, and then let's look for a level, something that is clear to see. Very clean sort of swings here developing, and therefore let's just wait for the next one to happen. We've got a bit of a level. This is the last obvious levels that I can see. And with this level in our sights, the better price and the continuation higher would be favorable. Now, the invalidation point is quite a way away. That's a bit of a mouthful. The invalidation point is, let's try again, a fair distance away. I would say a long distance away compared to where we're looking for the entry. Therefore, this may not be worth it. If you want to look at the last swing as the invalidation point, that is also valid. We've also got the swing below and the swing below. The question is if we're going to hold this level. Now, if we do, the invalidation would be the last obvious low, and if we don't, we break lower, the overall invalidation will be the low of the weekly candle. We'll have to see how the market develops, and of course with the news, this will give us a little bit more clarity after the volatility hits, if it does. Now, we've got our targets marked out. Let's see which level we hold, if any. The next one that we can look at would be this possible level here. So that's another one to watch for. Therefore, the second option would be break lower and then a move higher. That would be another possibility. Again, as I'm saying, it's best to watch it. I don't like really trading on Mondays that much. Always preferable Tuesday, Wednesday, Thursday. And if we have a retracement and then some kind of swing continuing to the upside, then let's see whether that is the price action that we want and make use of that opportunity. So that's the Euro Aussie. Let's look at New Zealand CAD, one we looked at last week. We're looking at the bullish scenario because of this big bullish candle resuming to the upside. If you want to have a more in-depth look, have a look at the previous videos from last week. On the daily, we simply had very bearish price action and closing the week bearish, even though we did have an entry and it looked bullish for some time and then it failed. Now that it has failed, what next from here? Let's just now take a fresh look, reassess where we're at. Okay, let's begin with the daily. So we have a bullish idea, bullish scenario in mind, and that is our bias. Therefore, with keeping in line with that, we want to see a better price. Now, we have the last obvious invalidation, the last obvious swing point down here. We want to see a better price. You can draw a fib once again here, and you can see that here we've got 61, we've got 70 and 80 levels, and below here, which is the halfway mark, would be a good place to look for an entry because we're getting a cheap price. And now we have our zone. What we'd look for is a drop into the zone and then a move higher. If last week you were not lucky enough to make use of this opportunity, or whether you had to get out or whether you got stopped out, now may become an even more interesting trade idea. It may not have been successful the first time, however the second time may be luckier if sticking with it. Why is that? Well, because we're getting a very cheaper price and we have a greater distance to go into the profit target, which is about 120 pips. And now it becomes even better than last week, in fact, because last week we were looking to buy at this level, which is more expensive price point than here. This is a cheaper place, a lower down place that is possible to buy at a lower price. If we actually hit that and if we hold it, of course, if we invalidate it, then going to neglect this idea entirely. Pound Swiss, what do we have in Pound Swiss? Well, similar to New Zealand CAD, after this bullish week, expecting more bullishness to continue and the price to go into the next levels higher, which are marked here in green. That is the pound Swiss bias. It did not do that, did not happen. We had simply bearish days, very choppy price action. It was not held and nothing really happened. The way to approach this is similar to the New Zealand CAD. We had a what looks to be a break of this high, and now we're going to look for the cheaper price. The last swing low was down here on this chart. So from the low down here to the high. The halfway mark is this line here, this gray line. So let me just remove all of that. So this is the halfway point. Therefore, what we want to do is we want to buy below here. Now, where are we going to look to buy? Well, we've got, let's look for a level. And I think the most obvious one is about that line. So therefore, here, got a swing here, got a swing here, got a swing currently here from Friday. Therefore, a drop lower, getting a better price. The invalidation point would then be this low here. This would be a tighter low over this clear swing. However, just to give it a bit more room and to be safe, especially at the beginning of the week, this point right here, 1.09, looks to be a good swing to protect yourself from. And should we go below, we're looking at lower prices. Now, how are we going to look at this? Well, again, cheaper price into this level, somewhere around this level, and a rejection, a weak price action to the upside, reversal. If you don't know your reversal patterns, then maybe go and have a look at them. And then what we want to see is a break of the highs. Just look at a lower time frame. Break of the last obvious swing highs. And this would be the last swing high. So option A will be the drop and move higher, and option B would be the break of this high, retracement to get a better price, and then continuing higher into the next levels, and a decent risk to reward there as well. This could be a possible trend line. The reason I drew this, so we have here this point down below, got the next point, and this may be the point after that. This will be the breaking point, will be the factor that will tell us what's going on. We want to see a break and a close above it on this time frame, and then it will be interesting. Don't be surprised to see a bit more choppiness. We do have choppiness around trend lines, significant places, significant levels, and at the moment we are at the 1.1 significant level. Okay, that is the pound Swiss. Let's move on to Aussie New Zealand. Have a look on the weekly, and on the weekly this is something that we were looking to sell. It did in fact sell. Looking at this area here, let's just delete the previous one. At this area here for our buy, we did not reach that because Aussie New Zealand was quite a distance away, as you can see, and it's a bit of a slower pair. Now we've reached these targets at these extreme lows. I'm looking for the market to reach into this level, and as you can imagine, continue on its way to the buy side. Now looking at the lower time frame, what do we see? Well, towards the end of the week we had some consolidation, we did have a swing, we did have a broken structure, so all is well. The next point to look for is the last swing here, and if we're going to reach into this level 1.075 that I was looking at from the higher time frame, then the two possible scenarios, just like last week, are the sell, short-term sell, and then the long-term buy over here. Now the short-term sell would be a sell in a more expensive price would be this level that we have here, with the invalidation being this high. That would be the riskier one, because it's not in the overall higher time frame direction, and we've also cleared all the targets. Therefore, expect choppiness, don't be surprised. And I will put a disclaimer here, or just say a disclaimer that this is the higher, the lower probability scenario, and the one that is more preferable is of course this, because as we have a drop and continuation higher, we are going with the higher time frame flow, the bigger picture, and therefore the longer run. Let's see when we get there. Aussie news this week. we do expect a bit of volatility to kick in, and personally to be patient and wait for the candles to play out, particularly the daily candles, the daily time frame. Very obvious downtrade so far, nothing to show that the market wants to reverse just yet, and we'll have to wait for that. Okay, last on the list is crude oil. We've hit our targets for the sell idea, at least the first one. We have the second one down here. Previous weeks have been very bearish, looking to continue on that bias. Where we're going to continue, well, as you can see, what marked out is a pullback and then continuing into lower prices. Let's look on the lower time frame. This was the plan, and the market has not quite reached there during the week. This was the first level because of the major swing to the left, and then we've got the more expensive price point, which of course would be preferable. Here's the low, here's the high, here's the low, here's the halfway mark, 61, 70, 80 levels, and a better price. Typically, if you noticed, oil does do very significant, it's very temperamental type of character, I would say, if I was going to describe it on the chart. The market moves, and it does like to create very extreme swings. It's a very big market. It's a market that's traded by a lot of people, and a lot of money is involved in it, and there's a lot of manipulations and movements. Don't be surprised to see very deep retracements in oil as well. You can go back to your chart and look at it if you like to backtest, and then you can feel it out for yourself. I'm just speaking from one person's perspective, from my experience. Okay, there we are. This is the preferable place to sell from. We'll see whether we get a reaction off the initial zone and then go from there. Of course, with the dollar news this week, lots of dollar news. Oil may be affected by that. Maybe not, but we're gonna be open to those possibilities and risks. Okay, it's quite clear, I would say, reaching the targets, and that is your shortlist for the week. We are leaving the dollar alone for now until we have a bit more clarity. Watch out for the calendar. And remember, please do subscribe, put your notifications on so you get the videos on time, and follow along with the developments as we go through the week to find the next opportunities available. Keeping an eye on the calendar each day and the setup that we've got on the technicals, and then we can combine the two, and at the right time and the right technical price, those are the high probability scenarios. My name is Dima. Thank you very much for watching. I will see you in 2 days' time, and of course again on Thursday for the next analysis and market outlook. Bye for now.